Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Tuesday, June 13th, 5:19 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. Doing this for the first time with Apple EarPods. I recognize there was a sound quality issue last night. It ends up my microphone headset combination seems to have seen better days. So hopefully this will solve last night's audio problem. Let's get into it. State of the market. We're in an uptrend, and the behavior of the indexes and leading stocks certainly confirms that. But you can see we've got the ominous stop sign over here. We'll talk about that in a minute. Market leaders, very, very bullish, acting fine in an uptrend. All five of the major indexes across the three time frames that we track. That's the short-term 21-day, medium-term 50-day moving average, long-term 200-day moving average. All five major indexes trending above that. NASDAQ 100 has been extended for a while. Today, it got back above 10% above the 50-day moving average. Last time it got this extended, we had a 1.7% pullback. Will that happen again? Not necessarily. It could be that we go sideways. I liked how we went sideways last week and cut that distance from how far it was versus the 50-day moving average and the 21. We're kind of extended from the 21 also. Market really needed a little bit more of that from historical norms. When you're in a strong bull market, though, and we're used to being in a range-bound market for the last 18 months, recognizing and acknowledging a bull market and reacting and changing your rules to fit the environment is a difficult task at times. But we do know an extended market when we see one. And we put a hedge on today with the NASDAQ 100. Last time we put it on, it did what we wanted it to do, and really, we don't want to throw out a bunch of exposure that we have because we're too extended to the upside. We've used this as a portfolio smoothing mechanism. We survived CPI this morning. We've got two more data points tomorrow. PPI, which I don't think is as important as CPI, and FOMC, which is at 2 o'clock in the afternoon. That's pretty much guaranteed to generate some volatility. So we just took a little bit of exposure off. So what happened today? CPI came in below expectations. In other words, inflation weaker versus expected. Not by much, but it was enough to trigger a rally, which then had they pulled back, but rallied again to recover those gains. And it was a nice day across, as you can see, green across everything that we're going to track here. As I mentioned, tomorrow, PPI before the open, FOMC Wednesday. The RG8 is acting really well. This is our eight growth ETF composite. We just add up the returns on the day and divide by 8. It was up 1.3% on the day. S&P 500 kept up 4/10. Got just slightly higher than it closed. I think we were up 0.8 at the high. Closed up 0.7. NASDAQ 100 up 0.8. Dow up 0.4. Mid caps up 1.1. Russell 2000 up 1.2. This continues to be a icing on the cake for the market, adding to the breadth far and away. This is why breadth levels had been lagging, is the weakness in these stocks, but they have certainly performed very well over the last week and a half. Global 60/40 stock and bond up 0.30 as bonds pulled back in mass today, meaning interest rates a little bit higher. Very possibly it was the interest rates went up because people were selling bonds. When there's more supply than demand, the price goes down. That drives the yield up. Selling them in order to get into stocks after the CPI number today. In-house GROTECTION, our leaders continue to do this job. It seems like it's a different one every day. But the one constant is Tesla, which is now up 13 sessions in a row, up 3.5% today. Our other beneficiary was portfolio had benefited from NVIDIA up 3.9%. AMD had a big run up into a an investor day that they had today that ended up down 3.6% on the day. Let's get right into the charts, and we'll start with the S&P 500. You can see the 2 days up, 5-day consolidation, failed breakout last Friday, breakout on Monday, follow through on Tuesday. We're above this 43.25 level. Our next level is kind of shocking that I'm having to backtrack to do this. This day that I talked about all throughout 2022, 421, this is really the day when the second leg of the downtrend kicked in. And this was the last attempt to go higher. We ran into the flat 200-day moving average, the next leg down with a bunch of inflection points here. The 200-day moving average rolled over, and that was it for the rest of 2022 as far as hopes of any bullishness. But here we are revisiting these levels again. That's also a round number level, 4,400, and there's a fib level there at 45.34. So sorry, 4,500, 45.34 is the next level up, and 4,400 you can see there. Let's see. So a lot of room there. We've got 4,400 round number resistance before we get that far, but at this point, seeing what the Fed does tomorrow. When the inflation number came out this morning, the odds of a rate hike dropped to below 10%. We'll see what they are when we get to the tail of the tape. Here's the NASDAQ 100, strong and extended, closed 10.1% above its 50-day moving average. As I said, we put a 5% QID hedge on today. Just a lot of extended names in the portfolio due for a pullback. Again, this is a bull market. You try to sit on your hands, let them run, but that doesn't mean at different spots when we get ludicrously extended, and we're not ludicrously. I would say 12 to 14% is ludicrous, but this is extremely extended by historical basis. If you look back here in August of last year, we got 11% extended before a pullback. Last time we hit that this year was we got 11% extended on February 2nd before the most recent pullback. Last time, just a week ago, we got extended over 10%. We had that 1.7% sell off in the middle of last week, which we have very quickly recovered from with 4 days of strength off of the ADMA. So looking good there. Let's go to the Dow. Dow putting some distance between itself and that 34,000 level, poked its head up above a new high today, pulled back a bit, still up 0.4%. Now the two indexes that are responsible for the increase in breadth, and this was a very nice flag that got put in here on mid caps that we broke out of today. Step up. This rally started on 6.2 with the mid caps and small caps, with the gap above the moving averages in the 450 level. Next day was a pullback. Next day made a higher high, 2 strong days, 3 days of consolidation, very nice, and now busting out today. This is what bull market action is. You take a step up, you pause for a little bit, and then you resume. That looks fantastic. On the mid cap, small cap, very similar. Same situation, got above the 180 level, pulled back last Monday, 2 days up, Tuesday and Wednesday, Thursday and Friday rest, another inside day, but putting in the bottom above the ADMA and falling through to the upside today. Great stuff here from IWM. We've been in TNA to take advantage of this move. What's next? Let's go to the VIX. VIX is broken. The VIX is not broken. People saying the VIX is broken don't understand what the VIX is designed to do, and that's to measure volatility across the next number of days. And made a little bit of a rally yesterday as it got a little bit too far to the downside, but an inside day today. And for the first time, and I can't tell you when, the ATR of the S&P 500 is below 1%. And that's the reflection of what the VIX is doing. It's decrease in volatility being confirmed by the action in the indexes. Let's go to the dollar. Dollar gap down today, stayed down, closing the bottom of the range, sitting on the 21-day. I'm not trying to do technical analysis on the dollar saying it should bounce here because of the level. Same thing with the VIX. We're using these as reference points for the trend. And we're kind of range bound here on the dollar. Ideally, we'd like to see it break down. We started talking about a week and a half ago when it had this breakout, which has since failed, but that was not good for the market. It's since pulled back, and the market has rewarded with a move to the upside. But what hasn't been rewarded is what normally moves index to the dollar. Gold, even with the dollar down today, gold, and this is probably a reaction to the CPI, because fear being pulled out of the market, no reason to go to an inflation hedge, which gold is purported to be. But we're at the bottom of the range now, and gold should hold. Gold bulls will absolutely need to hold this 180 area, but down 0.74 on the day. GDX gold stocks down 1.1% on the day, failed at the declining 21-day moving average, which means the trend could not turn short-term positive on it. SLV back below the 21-day moving average, so that's a failure now into the flat 50-day moving average on silver. What's left? How about bonds? Well, we'll do Bitcoin really quickly since we're talking about currency alternatives. Bitcoin basically flat on the day. It's been below the declining 80 MA and 21 and 50-day moving average. That's a downtrend across multiple time frames, still above the long-term 200-day moving average. The broad bond index, BND, down today. Actually, a downside negative reversal. It initially gapped up. Look at the 5-minute chart here. Bonds initially gapped up at the open on CPI, but then sold off immediately. And as I said, I believe that this is just people selling bonds to get it to flip into equities. People don't seem all excited anymore about that 4 or 5% T-bill with the rally going on in equities. And as you know, in a free market, money flows to where it's treated best. PLT long bond. Look at how that 21-day EMA has just acted as resistance on price, looking at the low of the range on the day. Go to the 30-year yield, TYX. Outside negative reversal. There's a positive reversal on this, but still kind of mid-range, middle of the range that it formed when it broke above. We got to the near next. Also, it will be on that. For putting the of 21 rand did for 21 years that right. The thing that we do but this is an indicator. Look for like somebody start to build themselves a special price reaction that or 20.9 can that we on the next one. Let's see. Simply push with gap up. But then up there. Much 100 is did is today our leaders that we have bottom line today. With PI and the look at you know that another thing is look for a hand on this and dig them before you made their way on this to be they were not looking I use and particle at that point you pick up we've done that's a great you just edit and let's look at and looking for our look for the other after hours example like area reveal with industry uh, the way holding down that can continue to be a more area. You want to, yeah, Vandenbord.com, real quality 732. We is hey, we're right now. And down now growth mode. Uh, growing, having protected, it is the people it's not how much you market with that. And with that last video, back to your